Another stock that we've been talking a lot about on halftime on my show, Worldwide Exchange, is Apple and just how to view it. So, Joe, you're looking at this. You've made some moves in your personal portfolio when it comes to Apple, actually making a pretty big trim.
Listen, one of the benefits of this show is we're actually active in the marketplace. We're not just talking about how we're feeling about markets. We're actually doing things. And if you disagree with what I'm saying, listen, you have the ETF out there, go short it, go buy some puts, knock yourself out, have a good time. But my position in Apple over the last several weeks, it's a trading position. It's not a portfolio type position. So I've been riding the momentum higher. I've been buying high, continuing to buy it higher. I started at 206. I bought it all the way up to 232. I spoke each time on air when I bought it, and I said, I'm going to manage the risk when I think I see the exhaustion. I think I've seen the exhaustion. It got to about 235. 236. It looks like that's a temporary ceiling. I think it could go through there eventually and go back towards 240, 245. But in the near term, the smart thing to do was ring the register, take a little profit, reduce the size. I cut the position in half. I have no problem with that. And I deployed the capital back into the market. We'll talk about where in a little bit.
Were you ever overweight Apple's weight in the S&P?
So you're thinking of, in terms, like if you measure it, this is that it never was. Don't think about like it from a perspective of a portfolio.
Okay.
Don't think of it as you're a portfolio manager, and Apple's 6%, and I'm going to have an 8%. This was a trading position.
Okay. Right.
This was a trading position and just buying it and continuing to buy it as the momentum moved higher. And when you're doing that, you have to keep a tight stop. And in my mind, that's exactly what I did.
Before we move on, and Brent, I want to come to you. I know you're also an Apple shareholder. Is there a price where you would get back into Apple as a trading position? Right now, we're just looking at it trading at about 227. Is there a price where it again becomes attractive?
I don't look at it as a specific price. I look at it in terms of how it's reacting to the overall environment. The last several days, it seems as though, look, what I was identifying over the last several weeks is that I felt very strongly that growth managers were underweight Apple, and they very quickly had to return their positioning and rebuild their positioning once again. And that's kind of a tsunami. And I wanted to ride that momentum tsunami, and that's exactly what I did. I still have half my position. I still think the stock could move higher. I'll manage the other half of the position. But this is purely a trading position.
Well, 210 is where the 100-day moving average is, so I would say that's where you re-enter.
Okay.
Well, Carrie with some trading advice. Brent, coming over to you. I'll tell you what, Carrie gave us some more fodder to talk about. Do you agree with Carrie's thesis here that 210 is where you want to get back in at the 100-day moving average?
100-day.
100-day moving average.
100-day, yeah. I was just looking at that. And if you actually look at the chart, it was making slightly higher lows each time, which is important, right? And so it was making higher lows. And so I think if you can get an opportunity to come back in around the 210, I don't know if you'll get that opportunity, but I do think I added to the position around 210, 215. I think in line, he was at 206. I think if you go back and listen to the earnings call, it was an excellent earnings call. And even though iPhone growth was only 2%, the top line growth was much better than that. And I do think iPhone 17, whereas 16 was kind of like whatever, I do think iPhone 17, because they are full, all in on getting some actually consumer AI wins, is going to be a better rollout, and they continue to do well in China, especially with the Mac. And so I think the negativity of Apple is somewhat over, and this is a buy the dip stock for sure.
Wait, Brent, what are you expecting? I mean, Apple Intelligence, we haven't seen much. What could they do on this phone that would be considerably better than the 16 to juice that refresh cycle?
Well, I think everything they do is always incremental in terms of the iPhone. Tim Cook talked about, and this is a basic thing, but I mean, I travel a lot, where you would have real-time language translation, right? So, I mean, Google Translate's clunky in the other ones, but real-time language translation. I mean, to me, on the camera, being able to do actually what Android already does very well in terms of erasing people, and which to me is like another negative against Adobe. And so I think with the photography, with real language translation, Siri is still the Trojan horse, though, right? And so ultimately, from a consumer device, Siri needs to be exponentially better. It's still irritating to work with, but I think that's the opportunity there. I think they will get it right, but it's going to be a 2020. Tim said it's going to be in 2026. And so I think buy the dip here, and it'll be a good name longer term.
It also helps you go to the White House and give the president a gift.
No comment.
Sure.